Hey, everybody, Tom Gentile. Welcome to the Profit Strategies podcast. We're heading into Memorial Day weekend. Glad to have you here with me, as always, is Chris Johnson. Chris,
hey,
happy Memorial Day weekend to you. What are you doing this weekend?
I'm heading your direction. I'm actually heading down to Florida to see my son. So
nice.
Well,
bring some extra cash with you because food prices have gone up, and it's costing quite a bit more to grow out this year than it did last year.
Yes.
So if the folks in DC don't realize it, inflation really is happening. They take out food prices and they take out this price and that price, and I don't know what they come up with, but let me tell you, Main Street America definitely feeling it when they look at the pumps. It's costing more for you to drive down from Cincinnati to Florida. It's going to cost you more to eat. It's going to cost you more to drive back. It's going to be a more expensive holiday weekend than it has been in quite some time.
I'm hoping, actually, Tom, just to skirt some of those expenses by making my son pay for dinner, by the way. So that's
as you should.
That is my inflation buster plan right now. I'm going to have my son pay for some of the meals.
It is the least you could do for bringing him on this earth. That's what I always say to end the conversation of any debate that I might have with my kids.
I think
is that they're lucky to be here.
That's a great point to make to close everything out. Drop the mic on that one.
So as we head into the weekend, what's the big news stories that you're seeing that are impacting the markets?
You know what? It's continuing to be some earnings. If you're looking at it, you've got earnings trickling in from the retail sector, which is just not going to cover off the ball. You've got some that failed. Nordstrom is one, and they're not surprises. I mean, if you can think about it and just tell a story, I was mentioning this to a subscriber a few days ago. It doesn't surprise me to see Nordstrom missing because the people that shop at Nordstrom's have been shopping there the entire time through the pandemic. They have private shoppers. I didn't expect anything, but when you look at, American Eagle, Abercrombie & Fitch, these companies that are really seeing more traffic, it's showing you that this reopening really is happening.
And you look at Abercrombie & Fitch. I mean, they really turned around I thought their business was DOA. Before the pandemic, and somehow they got themselves a reset. They really got a get out of jail free card because the pandemic hurt all the retailers. It gave them time to re-strategize and say, we have time now to make an online presence. Yeah. And what is it for? Nearly half of their revenues now are online, where they had almost zero online presence 2 years ago.
Yep. I mean, it is truly, if you look at it, you've got Walmart that's trying to obviously increase their online. It's all about increasing the online presence. But how about this? I'm thinking about this. For the next 6 months, are online retailers really going to have an advantage? Or is there going to be an advantage to having people walking up and down your aisles? Because people are itchy to get out there and do things. I mean, they really are.
They are, yeah. And that's a good cost to the gas prices. I'm going to throw up, this is the other news stories that I'm seeing, jobless claims, that really weren't a big move, but that's what kind of pushed to the end of the week. You come along here, retail investing's doing really well. Siblings who control James Bond, that's not anything that's going to help us. But I mean, Ford Motor Company. So Ford Motor Company has been a big topic this week when it comes to EV. In fact, what I've noticed a lot of their options gaining traction. A lot of option traders going in buying Ford, not just the front month options, but we're seeing options in January 2022. A lot of call options have been purchased based on where traders think Ford's going to be early next year. That they think it's going to take that long, and they want to be invested as an option trader for several months now.
Yeah, Ford is truly a story. When you saw that, and at least when I saw the commercial for the Lightning for the first time, you kind of did whoa, that's a cool looking truck, and that's going to sell. Now you've got the hardcore people out there that are pickup truck people that are never going to buy an electric truck. It's just not.
Well, you know what? Our generation might not, but the generations to come might look at fossil fuels as exactly that. fossil fuels. So, I was saying, I never say never, because you really, you don't know what's going to happen in the future. But I'm with you. Today's crowd, we like to hear the roar of the engine. We like to know that when we're on E, we have to go to the pump and not go to a charger. But with battery technology just getting better and better all the time, I do see that transitioning that's going to happen over the next 10 years, I believe. And if our government has anything to do with it, they're going to be pushing away from fossil fuels and pushing more towards that clean energy.
Yeah. Oh, absolutely. Which is and we can segue over to that in a few minutes, because you've got some clean energy stocks that are starting to pick up a little bit here. And I think it is because there are expectations that we're going to see that push. But back to the Ford for just a second. You're also going to have, I think what you're going to have are the weekend warriors that are going to switch over to that electric vehicle real fast. The people who are, every once in a while driving to get maybe a load of mulch or something, but they're more using it to drive to take the kids to the soccer game and maybe even the construction site. You'll see some of the managers, people who aren't hauling things is where I'm going from. And I haul, as I haul what I call my mobile trading center now around behind my Toyota Tacoma. And I would not, if I had the option for an electric vehicle right now, planning trips to go out west to Moab and all these places, I would not opt for an electric vehicle if I'm taking even a small camper, simply because
I'm with you. I'm actually in about a month from now, I'm actually going to be picking up my Mobile Trader version 2.0. Mm-hmm. And so, and we'll be doing some of our podcasts and some of the, we'll be doing a good bit of that right out of that vehicle as we go from city to city or from state park to state park to really kind of ease back into the travel the way, at least that my wife wants to, is very slowly. So I've got a chart. Let's just go through the top 40,000 foot view. And we're looking at the S&P 500 continuing to move higher. We said last week that we were heading into a holiday week, and that holiday week we're going to see prices more than likely go higher. That's indeed what happened. It hasn't been in a straight line, though. We've had a little bit of this, but at the end of the day, look at where we were last weekend and look at where we are heading into this weekend, and we're decisively higher on the stock market. So that's something I wanted to point out. If you take a look at bonds, all right, so TLT, we had talked about the fact that bonds typically move opposite of stocks. But this week, it looked like, based on our holiday patterns, that bonds and stocks were going to move together. And that's pretty much what we're seeing. We're seeing that the bond market over the last few days has moved higher and has moved in an upward trend. Outside of that, the U.S. dollar, if I take a look at it, it's pretty much as low as it's been this year and even into late last year. I don't see anything changing on that. The Fed postures, maybe we need to raise rates, maybe we don't. For every person that says inflation's here, there's another one saying we can't raise interest rates. So we're still very indecisive there. I don't see any big play on the U.S. dollar. Take a look at oil. You said it earlier in the podcast, and I talked about the fact that prices are going up. And if you want to look to USO, you don't have to look any farther, and you can see where was the price of oil and gas. USO was down in the low 30s. That was at the beginning of the year. USO is now trading in the mid 40s. That's a 20% better than a 20% jump in fossil fuels, if you want to call them that. And so that's definitely being seen at the pump. And I think it's being seen more now than it was, say, in the middle of March, when we were trading very close to these prices, because more people are out traveling now. And that's where they're seeing it, that they're getting that sticker shock because they haven't had to fill up their gas tanks until recently.
Yeah.
So I still see that moving up as we head into summer. Any comments on dirty energy?
Well, man, first of all, as you mentioned that, and I am heading out today to drive towards your lovely state of Florida. I am actually sitting here going, as you know, I'm downtown Cincinnati. So my truck sits probably idle, 18 to 20 days a month. And it's almost full of gas right now. So it's gas from a month ago. But man, that first fill up tonight is going to hurt. I'm going to look at that and go, what? So yeah, I think you're going to see people that are going to be going through the same thing that I'm going to go through here as I make my way down to Florida. Of how did this happen, and also what does that do? We've been talking a lot about consumer spending and discretionary spending and stimmy money and all of that. Well, if all of a sudden the amount that you're paying for fuel and for food, and we all know it, you can look at the DBA shares, the DBC shares, all of these things, and know that you're paying more. How is that going to look going into the summer when we're looking to try to get an economy that's expanding, and all of a sudden you see spending maybe slow down?
Right. So for those of you that are just joining us, you probably realized, or those that have been on the podcast for the last 10 minutes, kind of realized we got some visual stuff that we're playing around with. And Chris, I was going to ask if there's anything on your charts that you want to share with the group right now.
Absolutely.
So let me lighten your chart up there. There you go. And
what are
you looking at, Chris?
That's one you know very well. GLD, Tom, popping up above the 178 level here over the last couple of days and pulling back just a bit. You pulled up that dollar chart. When you look at the UUP, which is that index we often look at, bouncing down around that same level we were at in February. Remember when we launched and we all of a sudden saw that stronger dollar coming into play? But when we look at that longer term trend back up to a monthly chart, all of a sudden we're looking at tapping on that 24 level on the UUP. Falling dollar here. This is where I start to think about something you mentioned, interest rates. You know, for every Fed member that says we've got to have higher interest rates, you've got one that says we've got to have lower interest rates. We're getting ourselves into, and you saw the T word, taper, come into the news stream over the last week or so. When I look at these, and then especially when I look at the 10-year, TNX, the yield on the 10-year, man, it's starting to pop again. We've got support at that 150, 1.50, the interest rate at 1.50. When we look at the shorter term, just to make it a little bit, a little bit more of a real time, let's call it, if you can call it that, on the 10-year. We've been bouncing across this level, and it's looking like we're getting ready to see rates start going higher. Brings me to my question. When we look at all three of these, gold moving higher, dollar lower, interest rates higher, at what point do you think the Fed really does have to start talking about taper? And there's a second part to that question, if I might, Mr. President. And the follow-up being, what is the immediate result for the market? Let's just say the S&P 500. Don't fool around with all the other indices.
Well, I think that 1 or 2 months. I mean, this is a really tough question to answer because we have been in recovery mode big time. Mm-hmm. I think it's going to have to continue. I think it's going to have to continue into midsummer, and then I think we really start having some serious conversations about interest rates going up. But I'm a technician, Chris, and a technician looks at the charts first, and the charts are going to tell us in many, many cases what the underlying market, wants to do. So I'm keeping an eye very closely on TLT. And if we break below those 130s and we get down into that mid 130 level on TLT, then I believe you're going to start hearing more and more of that conversation of interest rates going up. And then what I'm concerned about is what kind of effect is it going to have on mortgage rates? What kind of effect is it going to have on this red hot real estate market we got going on right now? So all very good questions to add. Let's shift the conversation.
Do it.
Cryptocurrency. Last week, I was like, and a lot of other people were too. Okay, I wasn't, but I'm being over dramatic.
Right.
But a lot of cryptocurrency traders got to be happy now that we've gotten this bump in crypto, and you can see it. You can really see it right here now. That if I were to blow this chart up a bit, so this is Bitcoin, and again, if you were to look last week, we were down here in the 30s, in the low 30s. In fact, we hit 30,000 on Sunday. We hit on Wednesday. This is a week ago. We almost hit 30,000 twice. Since then, we've seen a modest recovery. Mm-hmm. In fact, as of this podcast, we're trading above 40 on BTC. So were we oversold? And is this the buy that a lot of folks were looking for this market to trend higher. What are your thoughts?
You know what? I think when you look at it, you were oversold. You had the 200-day moving average coming into play on Bitcoin. You had some technical things there that, from your perspective and my perspective, technicians that are watching those lines and know that the market watches those lines, you had to see a bounce. With the oversold, I always ask myself, is this just an oversold bounce and that's it? And we're gonna, a dead cat bounce, as they say. And I always say my apologies to all the cat lovers out there. But is this and I'll never say, is it a dead dog bounce, because I'm a dog lover. But is this a dead cat bounce? And when I look at what's happening in Bitcoin, I have to say, no, I don't think it is. Because you've got that 200-day that's there, which adds even more technical levels that you want to watch with that moving average. And then you've got, as you've got up here, you've got that 68 or 61.8% Fibonacci level. So you've got, Mr. Leonardo from Pisa that is giving you a little support there. When I put those technicals together, I say that this is something that we should see a run. When I see Ethereum that's starting to show its strength again, it gives me a little better feel. And more importantly, when I see the headlines start to die down a little bit, you and I both know there are a lot of FOMO people out there that are just chomping at the bit.
Right. There are. And I also have to, there were a lot of big wallet purchases down around the low 30s, that level as well. The other interesting thing is, and I'm not a big Elliott wave trader, but if you were to go through here and figure out how to count these waves, this was more than likely could be a fifth wave top. And typically what happens after fifth wave tops is you get this, what we call an ABC correction. The A wave would be down, the B wave would be up, the C wave would be down. If that indeed is an ABC correction, then we start a whole new bullish process that might take, again, months, maybe even years to come to play out. I'm really interested in seeing if this indeed is the ABC correction off of this Fibonacci level, and then where we go from here. I mentioned this earlier on one of my videos on our YouTube channel. And so I just wanted to bring it up on the podcast as well for those of you that are actually viewing the podcast and not getting us by audio. But if you're getting us by audio, that A wave went from 63,000 to 558 down to around 40, I want to call it 47,000. We had a bounce back up and it took us near 60,000 before the drop that we saw that came into the lows last week of 30,000. So that, that one drop down, move back higher, third drop to new lows is what we call the ABC correction. Now, you brought up Ethereum, so let me bring up Ethereum.
Yes.
And again, the symbol to it is ETH. And I'm going to bring it up on the screen right now. We have a 200-day chart of Ethereum. If you look at the 200-day chart, here's what happened to Ethereum. We went from below 500 to 4,178. All right. So count them off with me here. That is an 8x move from the time Joe Biden got elected president to just recently. Now, what also happened is over the course of May, didn't even take the whole month. It was a couple of weeks. We went from 4,178 down into the 1800s, which took us down. That was a 62% retracement off that move from 500 to above 4,000. That happened in about 2.5 weeks. Since then, we've had the bounce. We're back up above. We were at 2,800 just a day or two ago. And so Ethereum's getting a big, big bounce higher because a lot of people think this is the coin of the future when you look to cryptocurrency. When people ask me which one's the most valuable coin, I mean, one day it's Bitcoin, one day it's Ethereum, and I think as an alternative investor, you have to be invested in both. And so, you never really know. You got folks out there, that are big cryptocurrency, whales, if you want to call them. And the whales on BTC, they say that that's the original coin. That's going to be the rarest of them. I don't know if I agree with that because there's some coins out there like Yearn Finance that have 64,000 in circulation. That's ridiculous. Right. That's why that coin went up to 90,000 before pulling back. But I do think in the broad scheme of things, Bitcoin is rarer than Ethereum, and that's why it commands the price that it does. It's also a very great stored value of wealth. I haven't really said this much before, but think about it. You can take, let me find it here. It's in my office here somewhere. I've got to look. If I look long enough, I'm going to spot it. Well, here's one of them. This is a stored value of wealth. You can take a thumb drive. This is a little bit bigger than a thumb drive. You can put your Bitcoin, your Ethereum on it, and you can then go to the other side of the world if you want to, and you take it with you. How many of you could say the same thing about gold? You know, I mean, you could take cryptocurrency and put it on a thumb drive, right? This is another nano wallet right here, little thumb drive, and you can take this with you anywhere. You can take that stored value of wealth anywhere. What else can you do that with? All right, that is not can't do it with U.S. dollars, can't do it with fiat currency. You can't really even do it. I mean, you can do it with the stock market, but you're bringing it online with you. This is the only offline storage of wealth that I know of where you can take it anywhere, put it in your pocket, and be on the other side of the world, be anywhere in a moment's notice. That's why I think things like Bitcoin and Ethereum have such great value to them, is that and I believe they're going to continue because they have that storage of wealth. They have a limited amount. You can't print more of them. You can't print more Bitcoin. Right. We can mine Bitcoin up to 2140, but then that's it. It's gone. There's only a certain amount. There's only 21 million coins that are out there, and that's all there'll ever be. Yeah. So, Chris, what's on your radar after Memorial Day? What do you see?
Well, after Memorial Day, I think obviously we've seen a light volume market here for the last couple of weeks, and it's driving me crazy. I don't know about you, but it's fun, but it's also one of those situations where at some point you just walk away and you say, no trade. I'm not going to trade. I'm at that point right now, Tom, where I'm not adding much of anything to my portfolios personally or professionally, and just waiting to get back to some normalized volume next week. Next week, we kick it off, and from a seasonality perspective, things should be a little bit slow. Earnings season's kind of coming to a close, but 2-3 weeks into June, we're going to start looking at the earnings season firing up in the beginning of July. That brings me to what I'm looking at. I'm still looking at financials here. When I look at the volume that's going through the market, even today, you're still getting 25% of the volume that is trading on the widely traded ETFs. And by that, I mean like your select spiders and those type of ETFs. 20 to 25% is still going into the financials, the regional banks. Man, this sector and it's moving higher. I think that's the area you're going to be finding a lot of opportunities over the next couple of weeks here, as that obviously is also the first group that we see announce their earnings. So the financials are getting a little hot for me right now, especially the regional banks. And then a strange thing is happening. The cannabis trade is coming back.
It is.
Yeah.
So, it is. Martha Stewart is, leading the headlines now in the cannabis industry. I just want to back up. So hold that thought for a moment. Yeah. What I have on the screen for everybody is my snapshot of the ETFs looking at the money calendar. So this is a seasonal chart for June. And as you can see, the majority of it is green. There's a couple of yellows on the screen, but my money calendar seasonal look back at all of our ETFs is definitely showing many of them on the bullish side as we head into June. And June is a 4.5 week, 5 week month when you look at it. I mean, from Tuesday to Tuesday, it's a 5 week month, but we do have 4 Fridays that we're going to be dealing with there. And so, yes, I'm in total agreement with you. The first half of June, even though I show bullishness, there's not a lot of news coming out of the private sector that's going to affect this. But the news is going to start to jump a little bit more as we head into, at the very least, the final week of June. Right.
Yep. I am picking up, and as I mentioned, the cannabis trade over the last few weeks. I think this is very interesting, Tom, because I've been referring to the cannabis trade as the second 100 days, and that's failed me. I was wrong, or it's the fact that the infrastructure spending bill is just taking so much time and effort and political capital to get this thing moving. So you're not going to have time for cannabis to come up in the second 100 days. I think at some point it does, but I think it's interesting volume is starting to flow into these names, especially some of the smaller ones. Sundial, the Green Dutchman. I mean, there are some of these small cannabis trades that are starting to pop, as well as canopy growers, the traditional ones, Tilray. And we're also seeing some of these clean energy. We talked about dirty energy earlier. You're starting to see some clean energy that is showing signs of a long-term bottom. First Solar is the first one that comes to my mind. Blink charging is another one that comes up in my mind. But I think it's time for those listeners that are long-term investors, not necessarily traders, that may look for those to buy those opportunities on long-term dips. I think the ICLN now starts to look attractive, 30-40% lower than it was in February, as a second half of the year hold. So does the TAN, TAN, which is a solar ETF. That's where I'm putting a lot of my focus right now in this.
Good stuff. So before we sign off, I want to make sure everyone realizes this. So we are approaching on our YouTube channel 20,000 subscribers now since we started this thing pretty much this time last year. This is very exciting. It's a milestone for us. So I got two things I want to let everybody know about. Number one, I will be doing live streams starting Tuesday for the rest of the week. So every day I'm going to do a live stream next week. And Chris, would love to have you on one of those. So let's see if we can hook up and do some live stream while the markets are actually open. And so, we're going to be doing them Tuesday, Wednesday, Thursday, Friday at noon. So maybe I can throw an invite your way, have you come on as a guest and see what we can do there. Also, I want to let everyone know we got a new app that's going to be coming out very, very soon. And I'm going to talk about that in the live stream, and we call it our morning report. So it's going to be a morning report that's going to show everyone what we're looking at in terms of and this is for option traders. So you're going to see the options with the highest volume, the highest open interest. We're also going to show unusual call and put volume. And finally, options that have the cheapest implied volatility. We call them the cheapest options. And also those options are the most expensive in implied volatility. It's a brand new morning report. It's going to be an app version, and we're going to allow everybody to download it absolutely free. This is going to have no cost at all to anyone. We just want to get that information out there. And so I'll be talking about how to access that free app next week on our YouTube channel during these live stream sessions. So just wanted to put that out there, guys. Hey, Chris, thanks a lot. Hope you enjoy your Memorial Day weekend. I know I will be. I need to rest up because things are going to get crazy on Tuesday.
I am I'm taking most of next week off too. I'm going to be down there in Florida right by you for all week. So
cool.
I'll be working, but little time on the beach as well.
Awesome. Yeah, the beaches here are fantastic. The weather's been great. It's been actually unseasonably dry down here. In fact, we've had red flag warnings down here for the last week or so to let you know the humidity is it's gone. I'm sure it's going to come back, but anyway, hey, have a great weekend, Chris. And those of you that are watching or listening to the podcast, you have a great Memorial Day weekend as well. We'll see you again next week. Thanks again, everyone. Bye now.